Alibaba just announced its Q3 results on February 23rd, and immediately after the announcement and until now, the stock has been performing really bad, and Alibaba is back into a huge slump. So in today's video, I want to talk with you guys about what exactly happened, why is the stock performing so bad even though the earnings report wasn't actually bad, and second of all, I want to check out if Alibaba is still a good investment. With that said, my name is Chris. As usual, super happy to see you here. So with no further ado, let's jump right into it. So straight off the bat, in my own personal opinion, I do believe that Alibaba is still a good investment. I'm personally holding Alibaba in my investment portfolio. It's quite a big percentage also of my portfolio, and I am still a strong believer that Alibaba is a really good business. Despite all the competition fears, Alibaba is still the dominant e-commerce player in China by far. It's also dominating several parts in Southeast Asia and is trying to expand quite aggressively abroad into other markets as well. So Alibaba has still growth ahead of it, and it is at the moment still dominant. Also, China just finished their zero COVID policy, so I'm pretty sure that there is going to be some kind of a recovery in the next few months. The problem is that that's not in the earnings report yet, because the earnings report finishes on December 31st. So China opened up, I think it was early January, like end of December, so that's not represented yet in that earnings report. So I do think that the next earnings report in another 3 months is going to be a much prettier picture than the one that we just received. So I think Alibaba is a really good risk reward play at the moment. There's huge upside potential if China demand strengthen up a little bit again. Alibaba is definitely gonna pop, right? If we just get one really strong earnings quarter, it's gonna be crazy what's gonna happen with Alibaba stock. The other side is though the risk. So there is of course also still risk, and that's something that we as investors really need to consider, right? There's first of all the risk, of course, of the government. We still don't exactly know what the Chinese government is planning to do with those big corporations, that are publicly listed abroad and so on. So that's definitely still a risk, even though I can see that the government is switching a little bit and there's this idea of maybe opening up again a little bit. And there's the idea also of encouraging business again. And that's definitely something good. So I hope that in the future, there's going to be less crackdowns on those big corporations. And then of course, there are also the tensions with the US, right? So this China-US kind of trading conflict and, Taiwan issue that's going on. That's also definitely still hampering demand a little bit, exports and so on. So those are the main risks that I'm seeing at the moment. But again, it's all about your personal risk reward attitude, right? For me, I think it makes sense and it's worth to keep a little bit of money, a little bit of my portfolio in Alibaba, because I think that if China is gonna recover, Alibaba is going to be one of the biggest beneficiary of that recovery. But it's something that everybody by themselves need to evaluate. I can't really tell you here what to do. It's about your personal risk-reward attitude that you have. Then jumping over into our second point that we want to discuss today is what happened exactly to Alibaba. Why is the stock down in such a slump? What was so bad about the earnings report? And for that, we'll jump over into the investor presentation and we'll look at a few numbers and the idea of most investors behind why they also sold the stock and why they're still selling the stock. Jumping over into their financial highlights, we can see that total revenue came in at 247 billion renminbi. And that's an increase compared to 2021. But the problem is that it's a very small increase of only around 2%. And I do believe that investors here wanted to see a greater increase in revenue. So the whole revenue of Alibaba at the moment is more or less stagnating a little bit. And the problem is that in our mind, we have the idea that China opened up, right? China ended its zero COVID policy. So why is the growth not coming in? But it's very misleading because China has opened up after the timeline of this report. China opened up in January. This report is from December. So, of course, it takes some time for those companies to actually produce those reports, to make those reports. So, it's a delayed picture of around 1 or 2 months. And that opening is not really priced in there yet. So, I believe personally that next quarter report is going to be very, very good. And that's where we're going to see the opening up of China. Because in fact, we see that, and it's a little bit of a proof here, that China commerce is still down by 1%. So the whole Chinese market has decreased by 1%, and China commerce used to be Alibaba's biggest and most important segment. And of course, that's scary for investors because China already opened up, right? We think that that should be a crazy increase. But it's not yet. It's about to come. On the other hand, we see a few good pictures. We see that international commerce, right, increased by 18%, which is definitely, a good rise from last year. And we also see that Cainiao, so their logistics service, did very well, and their cloud also increased by roughly around 3%, which is again not as much as we hoped, especially for the cloud. Cloud is important nowadays because it's a very high margin business. So we want to see cloud revenue growing because it's really going to affect our bottom line. Now, where it gets very, very interesting is their income from operation. And we see that that has increased by roughly 400%, which sounds obviously very crazy, right? We had a income from operations of 35 billion renminbi this year compared to 7 billion last year. Now, it gets very tricky because it's not that Alibaba has performed so much better this year than last year. The thing is that we had that huge impairment of goodwill of 25 billion last year that we didn't have this year. So we had a decrease of 90% of write-offs of impairments of goodwill last year. That's why the number last year looks so low compared to this year. If we add it back together, we got, the 2021 together is roughly around 33 billion, and this year's together is roughly around 37 billion. So there is still a difference. We still grew, by 15% roughly, if we calculate it together, but not really by 400%. That is a little bit misleading, but I'm happy that Alibaba is honest and at least they show it in their report, like obviously why that happened. So don't think Alibaba did like a 400% increase in income. It's not really like that. It's a non-cash charge, so it's not really performing much better than it did last year. And that's exactly why sometimes GAAP is being criticized a little bit by accountants and financial professionals, because this kind of things can happen and it just doesn't look very realistic. And if we look at non-GAAP measurements, sometimes they're a bit more accurate because we can see that adjusted EBITDA, which takes out that impairment of goodwill, grew by roughly around 16% this year compared to last year. So much, much smaller than obviously the 400% that GAAP would recommend us. But nevertheless, 16% growth is really, really good. I do enjoy to see that. I personally do actually think that Alibaba performed okay in this Q3. Again, I'm very curious to see what's going to happen next quarter, because if Alibaba continues to dip like this, I'm going to continue to buy into Alibaba because I still believe Alibaba is going to do much, much better next quarter. Anyways, Alibaba, I think we shouldn't look too much on earnings, but I think we should look on cash flow. Cash flow is one of my preferred measures rather than actually net income, because it shows, how much money is coming into the company and how liquid the company actually is. And if we look at cash flow, we can see that their net cash provided by operating activities jumped by almost 10%. So from 80 billion renminbi to roughly around 87 billion renminbi. And that's really good. And that's where I see a little bit the growth that's coming in from Alibaba is actually from their cash flow side. And I do definitely enjoy to see that. Then we do have a little bit of capex, so purchase of property, plants and equipment, of roughly around 9 billion last year, and this year around 6 billion. So we had a decrease in capital expenditure that the business needs to put into their operation to keep the business going. And that's really, really good. I like to see that. So we get a free cash flow of roughly 81 billion renminbi compared to last year's 71 billion renminbi. So we've got a great increase here. Again, roughly of around 15%. And free cash flow is one of my absolute favorite numbers to check out in any company. It's one of the most important measures. And I think, in fact, it's more meaningful to talk about free cash flow than it is about, net income on GAAP measurements, right? So free cash flow here, obviously not a GAAP measure, but I think it's a very powerful number. It tells us a lot about the company, and I personally always keep an eye on it. So Alibaba here, just an absolute cash printing machine. So what should we do with all of that money? 81 billion per quarter, that's roughly around 11 billion US dollars. Well, I think fairly straightforward. They're buying businesses, they're expanding into new areas, and with the rest of it, they're actually buying shares back. And we see that they had share repurchases of 24 billion renminbi. That's roughly around 3.5 billion US dollars worth of share repurchases. That's insane. If you're holding Alibaba at the moment, what's happening is your piece of the pie is just constantly increasing without you doing anything. That's something I love about Alibaba. And the thing is here that Alibaba is repurchasing much smarter than a lot of other companies because the stock is down in the low 80s, 90s at the moment. And that's where Alibaba is buying back stock at such great value. They didn't buy back stock when Alibaba was up at 300 US dollars. That would have been a stupid decision. But they're doing it now when the stock is down at 80 US dollars. And it's just fantastic. And I talked about that in my previous videos. I just keep, repeating me here a little bit because this is just a no-brainer. I think this is just fantastic, right? We've got unbelievable amount of cash on our balance sheets. We're doing a lot of free cash flow. We're repurchasing stocks. At the end, stock prices will follow the fundamentals. And the fundamentals of Alibaba are fabulous. Since we start talking about balance sheet, just have a quick look at this one. They have a cash balance which makes up from cash equivalents, short-term investor and treasury investments of roughly 80 billion US dollars. So around 600 billion renminbi. Insane. It's crazy. And they only got debt of roughly around 23 billion US dollars with 80 billion US dollars sitting on the bank. So they've got a net cash position. If they would pay off all of their debt today, they would still have 60 billion US dollars on their bank account just sitting around. Or maybe in treasuries and other small short-term investments, but very, very safe short-term investments, right? And mainly cash. So unbelievable. So if you're not buying that business, I don't know which business you actually gonna buy, right? Of course, there are the risks that we talked about earlier about the government, and we don't know exactly, of course, China is maybe not the, I would say, safest and, most stable place to invest in, obviously. But I think from a risk-reward perspective, Alibaba is fantastic. Don't put all your money in there, obviously, right? I'm not saying that. I'm not doing that also. But to take a small position in Alibaba and sit it out, just, be patient, I think that's a non-brainer. And that's all really I got to say today because there's not much else to explain. Alibaba is a powerhouse and they're doing good. They've got cash. They're printing free cash flow. China is going to recover. And, on the long term, I think Alibaba is going to do well. So thanks for watching. Let me know in the comment section what you think about Alibaba. And then don't forget to like the video and subscribe. Thank you very much.